Hi, everyone. Welcome. My name is Jan Rose-Dahms, and I'm the Vice President of U.S. Development with the Mayshad Group. We are an ecosystem of brands for women, championing those connections that we facilitate between women and the companies and causes and institutions that support equity for women professionally and personally. We're thrilled to host our Thursday morning session with you this morning. We host Women in Money every Thursday, kicking off the week with Dr. Risa Reiger on Mondays at 4. We host our Diversity, Equity, and Inclusion series Tuesdays at 4 as well. And thrilled to be with two incredibly very talented, accomplished individuals today who have dedicated their worlds to making the world a better place through impact investing. Welcome. Hello, Paul. Hello, Liat. Welcome to our show today.
Hello, Jan. Thank you.
Thanks so much.
So please, everyone who's with us here today, please remember to type your questions and comments into the chat, and we'll answer those at the end of our show today. Please also make sure to visit us at joinmayshad.com, where you can learn upcoming events and how you too can become a member and participate in how we together create a more sustainable world post-COVID-19 for all of the women and the men that support equity for women in the workplace. Welcome. All right, so this is going to be a really interesting conversation today around all things related to money and economic development post-COVID-19. I have with us today Paul Ellis. Paul is the the host and founder of the Sustainable Finance Podcast. He's a sustainable finance consultant with Paul Ellis Consulting. Paul is a certified financial planner and franchise advisor for Ameriprise for 23 years and has become a nationally recognized expert on sustainable investing. As a principal of Paul Ellis Consulting, Paul works with both individual advisors and large investment firms to integrate ESG investing into their portfolio and sales strategies. Paul founded the Sustainable Finance Podcast, a weekly program featuring conversations with thought leaders in the space. To date, he's produced over 90 and counting episodes. He is the co-convener of the Sustainable Investing Conference held at the United Nations every fall. And fun fact about Paul was inducted into Tulane Athletic Hall of Fame for his football career at Tulane. Welcome, Paul.
Thank you, Jan. Thanks for having me today. I'm really excited to be here and talk about this subject.
Great, thank you. Welcome, Paul. And Liat Krawczyk is the Assistant Vice President of the Emerging Technology Initiative at the New York City Economic Development Corporation. She leads Cyber New York City, $100 million suite of public-private investments to grow New York City's cybersecurity ecosystem. Prior to joining, she spent almost a decade in growing startups, social enterprise ventures and ecosystems that in developed and in frontier markets with a focus on emerging technologies such as humanitarian civic tech and real estate fintech. And that's where Liat and I met originally, through real estate fintech. Liat is also, fun fact about Liat, a filmmaker and co-founder of the Geneva Project, a nonprofit organization providing Sierra Leone youth with high quality traditional and civic education, and most recently where they've launched an all-girls high school. So we're excited to talk with her about that later in the broadcast as well. Welcome, Liat.
Thank you. Thanks for having me.
The first question today goes to Paul. Paul, we know that the pandemic has literally touched every aspect of our professional and personal lives. And what are you finding the work that you're doing right now with financial advisors and wealth managers and firms in the sense of what's been their wake-up call during this period of time?
Well, first of all, Jan, we've had a huge shutdown of the economy all over the world that everybody is aware of and participating in one way or another. And that's going to take, well, nobody really knows how long it's going to take to get economic activity back up and running, probably quite a long time before it returns to how it was before the pandemic, and it may not return to how it was before the pandemic. So what's happening in the meantime is that monetary authorities, like the Federal Reserve in the United States, are pumping a lot of liquidity into the financial system to keep things going and make this difficult transition period at least palatable from the standpoint of people having some cash flow, being able to pay their bills. And for small businesses, they're making loans. And for large corporations, there's a large segment of the relief package that is being dedicated to companies. Now, one thing that's very important for people as investors and consumers to know right now is that the stock market is not the economy. And what you see happening in the stock market on a day-to-day or week-to-week basis is an estimate, if you will, a forward projection of what people who do investing on a day-to-day basis and manage assets for other people are expecting 12 to 18 months down the road in terms of economic activity. Everybody's been reading the stories about the tremendous impact on employment around the world, and even the economies, for example, in China and other parts of Asia that are gearing back up now, have found in the early stages of their back to economic activity period that a lot of their customers around the world are in lockdown and not producing any economic activity. So this is a unique situation in my experience. I've been in financial services since 1985, and the difference this time around, and there always is a difference, is that it's like a ripple effect. If you think of a wave coming on shore, more and more of the world is gradually being impacted by the pandemic and its initial health-related threats and issues. So how this is all going to play out over time in terms of the economic activity remains to be seen. Lots of people are starting to speculate now because we're a few months into it and maybe past at least the first wave of infection from the pandemic in the U.S. So a couple of points that I think would be helpful for folks to tune into right now is that there are some protocols related to sustainable investing that are being brought to the fore, if you will, as analytical tools and processes for companies, for asset managers, for leadership in policy and economics and finance. And one of those protocols that's featuring very prominently now goes by the moniker of the TCFD. That's the Task Force on Climate-Related Financial Disclosures. It was launched 5 or 6 years ago, and it is assessing the physical and transition impacts on climate risk issues on a global scale, by company, by sector, by country, et cetera. Now, some people might say, well, why a climate-related focus being so important right now? Well, literally, the coronavirus is a climate-driven occurrence on one level, which is pretty well acknowledged by a large swath of the scientific community today. So I think I'll stop there for a moment, and we can continue the conversation on other economic and financial issues.
So many questions for you, Paul. This is a great entry point. Liat, in the work that you do with the New York City Economic Development Corporation, the organization itself is all-encompassing from everything that you think about that goes into creating and sustaining a vibrant economic community. And of course, now, as we know, is what we've been talking already this morning, is that just the physical space of everything has changed so much, and the way in which we work and we relate and we live and we consume and we save. What have you seen, particularly in your work around cyber technology, is changing this very pivotal moment in time for New York City and the work that you do? Sure.
So maybe I'll start with a little bit of a landscape of what we do at EDC to give some context, and then dive into how we see COVID-19 specifically affecting this area. Basically, in the department where I work at EDC, we think about what are the economic sectors of the future, and what sectors does New York City have to invest in to bring to a point of diversification of the economy, but also to think about what sectors are the ones that are least likely to get automated out. And in times like these, where we see pandemics that require people to work from home as much as possible, have a lot of flexibility, what are the jobs that will be retained during these eras? And I think cybersecurity, along with other tech sectors, is a great example of jobs that are in incredibly high demand. So basically what we see is that worldwide, there's about 3.5 million positions in cybersecurity that are unfilled at the moment. And in the New York City metro area in particular, there are about 20,000 positions at any given time that companies are just unable to fill. So there's a huge dearth of talent in an area that is, again, sustainable into the future. We only see the digital economy growing and therefore cyber risk growing and the need for cybersecurity as well. And the beauty in that, I think, especially being on a Women and Money podcast in particular, is that employers are shifting to consider non-traditional talent in these areas. So they're not necessarily going to the universities that they've traditionally gone to, or to the profiles, or to the degrees that they've usually sought in the past. Rather, they are looking at a wide variety of talent, whether there's more women or more underrepresented minorities as well. So there's a really great opportunity here to diversify the tech sector and show how diversity really can add value at any given point. And COVID-19 honestly has just shown how pronounced the risks are. We constantly hear of attacks on our health infrastructure, our interruption of Zoom calls by hackers. And therefore, I think as more and more companies, including small businesses, move their assets to the digital sphere, they realize how important it is to consider cybersecurity, not as a technological pillar of their company, but as a core base of everything they need to be thinking about and doing. So I expect it will just go up, the need.
It's so interesting, Liat, and thank you for that, in the sense of, typically within the corporate setting, we often think of IT as a support service, as opposed to a part of the overall strategic strategy of a company's main business plan.
Absolutely. And specifically in cybersecurity, I think that's particularly important because 95% of breaches actually occur because of human error, right? It's someone who plugs in a USB or accidentally leaks something out into the open. And therefore, a lot of it is behavioral as well. So really, you have to educate an entire company top down about what cybersecurity looks like. And we also need people who are technical, but can communicate to a non-technical CEO what are the decisions that need to be made in case of an attack and in preparation for such a possibility. And so we need really a combination of people with soft and hard skills going into these fields to be able to really become more cyber secure.
It's interesting because I think that when we think about what today's unemployment numbers came out for last week, and it's an additional 3 million. So now we're at about 36 million Americans that are unemployed. And we also think about the number of those that are women, which are overrepresented in every single vertical right now. And I'm wondering, and this, the question, we'll start with Liat and then go to Paul as well, because I think that there's some nice overlap here in the sense of, for those women who may be over the age of 40 or over the age of 50 or found themselves now furloughed or laid off, this is an incredible period of time in which to pivot and reinvent oneself, right? And so, for example, when we think about traditionally financial services, the financial services sector and the tech sector, those are two places where the assumption is you have to have quite a bit of training and certification to be able to enter into those fields. Or for those of us now that are faced with this moment in time of having to repivot in our careers, what recommendations do you have, Liat, and then we'll go to Paul, around those women who may want to get into fields in which they have absolutely no experience or no seemingly apparent experience?
Absolutely. I mean, I think the way this ecosystem is being set up, again, at least by New York City, is thinking about how every person, no matter what their background is, can plug into the opportunity to leapfrog into a field that's paying entry salaries of $85,000 on average, right? And they go much higher as you advance in your career. And so You can do traditional degrees in cybersecurity. These are traditionally there was no such thing as a degree in cybersecurity. The people who are today in that field never went through an undergraduate in cybersecurity or graduate degree in cybersecurity. Those degrees are starting to appear. And a lot of those are also, they're options online and affordable options for people to look into across our New York City universities, but also across acceleration programs like boot camps. So we have cybersecurity boot camps that within, 17 weeks will accelerate you from someone with no technical background to someone who's able to get a job at the entry level. So there are so many possibilities to enter this field. And especially as more and more things move online, I think that gives women even more possibility to participate in that upskilling opportunity.
It's interesting around and we'll talk later in the show about how we all return to work as well. And, I think it's interesting what you're saying, because I think the ease into something that is unknown to us may be better facilitated and less anxiety ridden when there are those online options.
Absolutely.
Paul, I'm wondering from a financial services perspective, what your thoughts are on this, particularly from the perspective of we know that traditionally women are underrepresented in financial services from, particularly at the RIA, the Registered Independent Investment Advisor level. And is this moment in time, do you think of COVID-19 and everything that we're learning about the virus and sustainability and all things related to ESG, will this pave the way for more women to want to get into this space?
I certainly hope so, Jan. That's one of the things that I have been focusing on in my podcast and consulting work for a number of years now, because I feel very strongly about the fact that women are underrepresented in financial services in very critical roles, like the role of a registered investment advisor. When you think about what an advisory practice is, it's really consists of two components. It consists of all of the issues that people deal with around managing their cash flow, making investment choices on a day-to-day basis, making choices as consumers. Well, guess what? Women do that probably more often than men on a day-to-day basis in the running of a household. So that's that's an example of how women are already adept at managing cash flow, budgets, and management. Another part of this process is that it's very much a relationship-driven business and career opportunity. And one of the things that I see is as the amount of assets and the focus on sustainable investing continues to accelerate in pace and volume around the world, not just in the United States, I think that the emotional stability that women bring to any kind of job situation is needed right now. If you think about it, we're going to go through a period of years here where there will be tremendous uncertainty about financial well-being for millions and millions of people. And it's my experience in working with women in financial services that they are every bit and probably better at those parts of this kind of work as men. And you know what? Especially in sustainable investing, there are people with a multitude of different backgrounds. I can't tell you how many people that I have met, women and men, who do not have an education or work experience background in finance, who end up in sustainable finance because of the nature of how the work is perceived and the collaborative focus that is brought to this work on a day-to-day basis. So I sure hope that more and more women will consider sustainable investing and asset management as a career opportunity going forward.
Paul, I'm curious to hear your thoughts on wealth transfer in the U.S. and what's going to happen in the next few years as we think about women's role both on the investor side and the investee side. Talk to us a bit about how just transfer of wealth is going to really change the fabric of America in the next few years.
Yes, it's a really interesting time from that perspective, because literally, the estimates range from 30 to $50 trillion transferring hands over the next 25 to 30 years, and it will actually be two transfers that will take place. First of all, the men who manage and control most of the wealth in the country right now, and I'm talking about invested assets, are going to die before the women in their lives, just from a chronological standpoint, which means that the first wealth transfer will take place within the same generation, but it will be from predominantly men to predominantly women. So that's the first step. Now, we all know, that lots of people know, that there's a whole raft of studies that have been done over the last 15 years that say that the women who receive this wealth transfer are more inclined to think about environmental, social, and governance issues when they look at how to invest and manage a portfolio. When I was in practice, I would have conversations about sustainable investing with couples, male and female couples. And I would go through my conversation about introducing this topic, and the men would scrutinize me and look very closely. Well, I'm going to have to see some more data on that, Paul, before we can make any decisions about it. And the women would turn to their male partner and say, duh, I've been doing this for years, and this is the way women think as consumers. So let's get on with it. Let's start making the transition within our wealth management, okay? So anyway, the second generation transfer will be to the adult children of, whether it's men or women, from the baby boom generation. And 80+% of people in Liat's generation, for example, have already told us in study after study after study, if you're not considering environmental, social, and governance criteria for selecting companies for your investment portfolio, I'm gone. And so far, and I will find an advisor, whether it's someone with gray hair like Paul or someone in my own generation who does integrate these types of considerations into portfolio strategies to work with. So a lot of male senior advisors in RIA practices and with broker-dealer firms today are seeing that their retirement paycheck literally depends on a transition that allows their practice to maintain the assets that they have under management now, which means bringing younger advisors, women advisors, other people into the firm that will help them make this transition and actually be able to go sail their sailboat or travel around the world if we get back to that kind of a mode in retirement. Who knows, right? Anyway, that's just a couple of points. And as you know, Jan, there's so much literature on this. It's available to the general public. We can talk about that more later.
Great. Thank you, Paul. Liat, I'm wondering, from your perspective in working with many very innovative startups in the greater New York City ecosystem, what are you finding right now in this moment in time, maybe leading up to COVID or because of COVID, or the way in which innovation will keep moving forward in the future, particularly in the New York City ecosystem? What is the role for female founders and investors in the work that you do, either through the accelerators or incubators or other funds?
Yeah, I think increasingly we are definitely aware as a society of how women founders have it so much harder than male founders. And even though there is increasingly at least lip service buy-in to have more women as founders, we are still seeing those problems across VC funding, across representation, and in every way, particularly for women who are minorities. So I think we definitely need, this is like the number one space we need to continue to work on. And that I think starts at every level, whether that is making sure that people who are underrepresented in boroughs that may be, like let's say in boroughs that primarily are people and poor immigrants are getting K-5 education that has computational thinking, so that from the beginning, people want to go into these areas. Then we need to obviously think about how to perhaps, like Paul said, I mean, triple bottom line is increasingly important for younger generations. And I think that the demand for seeing this type of diversity is happening across the board, both from the public side, but also from definitely the public sector, who is putting MWDBEs first in terms of trying to secure business for those small and medium businesses and startups as a priority area. But unfortunately, I think that we have a lot of work to do in that sector.
Jan, I'd like to add to Liat's comments, because she's absolutely right on the mark about this whole area. And just to add a few data points to the conversation, I've recently done podcast programs with two women with extensive backgrounds in being advocates for other women in the workplace. The first is a private equity investor named Nisa Amoyles, who has been doing that for many years and wrote a book that's out about her interviews with women entrepreneurs who have been in private equity or venture capital for a number of years and go out to raise money for their firms. Well, the data says that when a woman entrepreneur goes to raise money and she does not have a male partner in her VC or private equity firm, that she gets funding from male general partners, male boards of general partners for funding organizations or foundations or whatever. She gets funding 2% of the time. If she has a male partner in her business with her, she gets funding 15% of the time. As it relates to senior representatives on boards and in senior management at corporations, another podcast that I've done recently was with Janet Wong, who is a CPA, a former a retired partner from KPMG, and she's on the board of directors for the 30% Coalition, which is an advocacy group for getting more women onto boards of directors. Janet is of Asian heritage. In the United States of America, women from Asian heritage control 40% of the consumer spending in our economy. You know what percentage of board seats minority women hold at major corporations? 3. So there are a lot of boards out there across the economic spectrum that are making choices for their business models at the board level without a clue as to how their consumers think about their products.
You know, it's interesting, Paul and Liat, like I think when we think of, from an investor perspective or from an entrepreneur perspective or a business owner perspective, or, all of the different issues that we know that we still grapple with today in the sense of how do we get more women into venture funding, for example, knowing that only, and Paul, you're exactly spot on, I think it's less than, it might be less than 4% now of all VCs are actually women. And so I'm wondering, coupled with what's happening right now with COVID-19, plus the intergenerational wealth transfer that Paul spoke about, and the need, I think, for if we're going to have economic equity for men and women, then it has to start within all different levels, right? And so we have to look at how many women actually have board seats and how many women are in senior level, C-suite level roles, or CEOs of huge Fortune 500 companies. And I'm wondering, in this moment in time now, is it kind of the perfect storm by which all of this could actually become possible, where perhaps even because of wealth transfer, that we start to see more women in senior level positions and on boards. And so therefore, then we're also shifting the dynamic of how companies, female founded companies are funded, right? Because as we know, like attracts like, right? And so one of the problems that women often experience is because women are often afraid to even dip their toe into the funding pool to be considered for funding, because there's an assumption that it's going to be a very long uphill battle for them. And at the same time, these implicit biases, these everyday acts of implicit bias happen where women aren't being considered in the ways that we should be considered. So I'm wondering if this is, if both of you see it as the kind of the perfect storm by which there could really be true fundamental change at all different levels.
Liat, why don't you take that one first? And
Sure. I mean, I don't know if this is the perfect storm, because what I can see happening is women particularly taking advantage. I mean, yes, maybe on the wealth transfer part, but generally in terms of COVID-19, I think that women tend to feel like they need more knowledge and more control over what they're doing, and a formal background in what they're doing in order to leap into a new field or into a new opportunity. And we all know that it's a lot about who you know and not what you know. And so I think what we need to focus on if we're really going to change the game here is not only how do we create horizontal networks, right? So like, how do we increase knowledge and across and like work with our peers, but how do we build vertical networks that allow people to connect to those in power? And that can be anything from like a good networking type of group, like the one that you're building, Jan, that really allows you to, be what you can't see, and also, have people who can give you advice and even have, a conversation with you about your future, but also in terms of, for example, having industry be much greater part of any sort of knowledge institutions, so like educational institutions. And then you have someone from industry teaching a course, that person then knows you, can have a cup of coffee, and they'll give you that first chance in whatever field you want to leap to. So I think vertical networks are really the question of how do we create those. That might be the game changer.
Yeah, that's a great image that Liat has created, because I totally agree that it's got to be broad in order for it to be a deep process of development, and it also has to be vertical, so that there are enough women represented in senior positions to be the mentors, to be the people who bring the women from middle management or early stage funding of projects along. Back to my conversation with Janet Wong, who's with the 30% Coalition, she and a partner launched a training protocol a number of years ago for Asian women of Asian descent, to help them become better at negotiating for themselves and making their mark within the corporate world, because one of the things that they saw was that culturally, Asian women typically are more deferential to the male partners and the male leaders that they work with than women from other cultures. And so there's lots of ways that this can be approached to make it broad and deep, and use the verticals where they're important. Another thing that is that until we have enough women in middle through senior management positions, whether it's in public or private market companies, we really are still dealing with a situation with the above average person makes their mark, and the average person, as a manager or even as a senior leader or a board member, the average board member, let's say, be it a woman or a man, until there are enough of those people that may or may not be the superstars, but they are very competent at what they do and effective and passionate about what they want to do and the work and the skills they can offer. Until we have a broader population of that nature, it's going to be very hard to distinguish from what's the average performance of board members, of senior women executives compared to men, that sort of thing. So that's a dilemma that I think the COVID virus situation creates an opening for, because we literally are going to change a lot of our business practices in the next few years, I believe.
You know, it's interesting what you both were saying about, I love the concept of vertical networking. And I think that in this moment in time too, look, in the same way why LinkedIn was created back in the day to equalize the networking playing field from a social media perspective, so that someone like me could very easily theoretically reach out to the CEO of JetBlue and potentially have a conversation, right? And so, and I think that there's now a moment in time too where we're networking together. Most of this is happening on digital technologies such as this, like Zoom, for example, where literally your box, your square, is the same size as everyone else's square. Right, so your Zoom square now becomes your calling card, and you potentially have the opportunity to network down and up and across in very different ways than when we were all networking in the physical world as well. One of the things that we're doing at Mayshad is that in response to many of the issues that you both and points that you both bring up, is that we have created opportunities for that vertical networking so that women from really diverse industries, diverse job sectors, diverse professional and personal backgrounds can come together and have those more intimate conversations where you're not just an observer to what's happening, but actually a true participant. And we have found that to be very valuable. And I want to come back to that in a second, in the notion of framing that within the cluster work concept as well, as we think about how do we all return to work. But in the meantime, there are a couple of other things that you both mentioned that I think bear further discussion as well around women in risk. And we know, Liat, to your point, you're absolutely spot on. And that's been our perspective too, is that there's often a hesitancy that women, for so many different sociological and socialized reasons, feel like they need to be at 100% before they try something or ask for something or become known as an expert in something. And for men, there's less of that internal pressure that stereotypically that they don't place upon themselves in the same way for very different reasons. I'm also wondering, in our conversations that we have with our larger Mayshad ecosystem, there seems to be something that's very special about what's happening right now, because the world is changing so dramatically and has changed so quickly. Knowing that we're not going to go back, even when we say when we go back, right? And so, you know, many of these conversations revolve around the fact of, you know, wanting to have more fulfillment, wanting to further align how we purchase and how we spend and how we invest along ESG lines. And maybe this is a different moment in time too, how women might become more risk tolerant, precisely because there's so little right now that we can actually control. So there may be more unique opportunities for women to really think innovatively in the sense of, you know, how they step into what their new roles become.
I'll jump in on this. I think you're absolutely right, Jan. I think now is a time when women can take initiative that may not have even been available to them a few months ago. I believe that women are the majority of graduates from all of our universities in the United States. And it's not just in the traditional fields of study that they pursued. It's in high tech, it's in management, it's in technology development of all different kinds that women are graduating, and STEM, scientific research, where they're a larger percentage of the population all the time. And I think that women should be seeking future employment and career opportunities in the same way that men do. You know, one of the things that men have always depended on in terms of job and connections and network and all that kind of stuff is, I grew up in Louisiana. Down there, we call it the Good Old Boys Club. And it's the way that men network. They do it very differently than women, typically, but it's a network that provides continuity around career and job opportunities. And Jan, you mentioned that I played football at Tulane. That gave me my entry point to a financial services career after I graduated. So that's just a personal example of how that type of network is something that can be valuable. And I think women are in more networks that can be career and work related than they realize often. So.
It's interesting that, we're not yet all back on the golf course. We're not in bars. We're not on, the tennis court. We're not at sporting events. We're not at concerts. And, women tend to network from much more of that relational perspective. And we're sometimes less activity based and more conversation focused. And now also, I think, is a very different moment in time for how women can step into their networking power and start to experience, and even for introverts that find comfort in the confines of their own home right now, that might be an opportunity for women to think through how they get involved in their communities differently as well.
Absolutely. I also think, there's first, I think absolutely everything you're saying, I agree with. What I see in particular is, for example, students who graduate from lower socioeconomic backgrounds tend to, when they're talking to an employer, they tend to talk about how lucky they would be to get a position, whereas people who are coming from higher economic backgrounds talk about how lucky the employer would be to have them as an employee. And I constantly tell students who are graduating from a lot of, my alma mater from CUNY, that they need to be more entitled. So I think women similarly need to be more entitled and feel like they are the ones who are contributing here and that people would be lucky to have them. But what I think is really exciting in particular about COVID-19 is that I think there's a lot of silver linings here in terms of how we can reimagine the economy, particularly in New York City. The labor participation rate of women is under 70%. So we are under Philadelphia, Boston, San Francisco, and pretty much every other city in the US in terms of labor participation rate. And a lot of that has to do with commutes. There was a study that came out that said that for every half-hour increase in commute, there's a 15% drop in the labor participation rate of women. So I think this is a fantastic opportunity to create real work-life balance that women who are moms, particularly to young children, are more likely to take advantage of. We also, on the other hand, I think that the decentralization of the economy has multiple other benefits, including obviously a lower carbon footprint, stronger diversification into our boroughs of the economy. Small and medium business owners, who tend to be more women and minorities as well, would get a boost in terms of how many people are actually participating in their business day to day. But what worries me the most is in terms of daycares. So before this crisis, we saw that only 22% of 0 to 3-year-olds, for example, had even a place in a daycare, whether that's a family daycare or a center. So about 50% of our neighborhoods only have the capacity to serve about 10% of children at the youngest ages, when women we know that they need to go back to work in order to be able to make up for gaps that will never be met otherwise. And now those can be decimated even more so to 10% or so. So I'm just wondering, and maybe Paul, with your background as well, you could talk a little bit about, or do you think we can give incentives to real estate developers here as they see less traction in traditional retail and commercial office space to incentivize them to create daycares as part of their businesses?
Yeah, Jan, I'll jump in. Thank you, Liat. That's a good opportunity for me to mention a task force that I've joined through the International Well Building Institute, which is a nonprofit organization that's headquartered in New York City. And what this organization does is it vets real estate for human habitation, health, and well-being all over the world. They have 10,000 people that they have certified to vet real estate in big cities, primarily all over the world. And to date, they have certified over 500 million square feet of both live and workspace for health and well-being and human habitation. So I think that's a really important part of how we reopen and re-enter economic activity, especially in the big cities. I think it's so needed. We spend 90% of our time indoors. Most of us do. So the buildings we live and work in are crucial to our own and our family and our co-employees' health and well-being. Now, whether you're working from home or in an office space, the considerations around that are multiple, and that's actually become a preferred investment focus in the industry, in real estate investing, that allows for investment strategies that are less correlated, let's say, to the stock market than a typical corporate share owner has. In fact, many real estate investors now are requiring that their buildings meet certain health and well-being standards because that enables them to charge higher rents, to attract better occupants, whether it's live or workspace or some combination. I see us going to a much more multiple use real estate infrastructure over the next 20 to 30 years as we essentially rediscover how people are living and working together, especially in big cities. And I think things like cybersecurity and technology development that goes hand in hand with real estate development and occupancy is a really important part of how that is going to develop. So
I agree, Paul, and I think that, you know, from a suburban versus urban versus rural perspective as well, we're going to see incredible shifts there too, in the sense of how we think about economic revitalization and living, working, and how communities form that ecosystem together. Liat, are you seeing that in New York City as well?
Yeah, I mean, certainly we're talking a lot about the risks to real estate, for example, to commercial real estate, to, I mean, just simply reopening the subway where there's 6 million commuters every single day is such a crazy, impossible task, it seems right now, in terms of how we will reopen the economy, that maybe we shouldn't even be thinking about reopening the subway to 6 million commuters a day. Let's reverse commute patterns. We have the longest commute patterns in the country, I believe. That makes our days about I think we work for about 2 to 2.5 hours longer than the average American due to commutes. Mm-hmm. So I think everyone will be much happier with a work-life balance that thinks about decentralizing away from Manhattan in particular. So I certainly think those are issues that we have to consider, especially because the immediate challenge of just restarting the economy without that is so difficult.
Liat, going back to the theme of innovation for a second, we hear that word being used a lot right now in the sense of this moment in time and a chance for us to all innovate and create something new in response to knowing that the new normal is going to be something very, very new. How in your work do you think about innovation in the sense of just how the word's defined right now? And are there lessons that even if we're not in financial services or in technology or in cyber risk areas can implement into the work that we do for ourselves and in our careers?
Yeah, no, that's a tough question. I think, I mean, a lot of what I focus on is growth over innovation per se, I think. It's about how we get the economy to grow stronger, more people to participate in, et cetera. I think innovation is very specific to shifting the way things are done. I think that requires seeing real opportunity in this tragedy, really, of what's happening, and seeing the silver lining of so many companies and so many educational institutions having to leapfrog into a technological environment, and seeing that it is possible, and seeing that maybe the way business as usual, has been conducted is not the way to go. Across the city, I know there are surveys for employees about whether they even want to return to the new norm. So there's a lot of opportunity here for innovation and thinking totally differently about how an economy is built. But that obviously requires a very large shift in mindset with a lot of buy-in from many, many different players. And I think it will be difficult to do, even though there's such a promise there.
And it's interesting because I know that the work that you do builds bridges between social enterprise and the public-private sector. And are you learning new aha moments and lessons from this moment in time in the sense of then what becomes on the other side of it? And Paul would also love to get your thoughts on this from the financial world of things as well.
So how public and private are coming together to work better?
Yes, yeah. And in the sense of, helping good companies do even better.
Yeah. I don't know how that's particularly affected right now. I'll have to think about it, but I certainly think, I think Paul touched on it before. I think everyone's kind of shifting more towards social enterprise. Like public sector is thinking more about how to work with the private sector to be able to, define skills that are needed, to define opportunities for people, to grant those vertical networks. On the other hand, the private sector has increasing pressure to think about triple bottom line. So I think we're all converging kind of into this middle, and there is definitely more partnerships. So we're definitely on our way there, I think.
Jan, I'm incredibly fortunate to work in sustainable finance, where collaboration and partnership are the accepted way of working together. I'll give you a quick example. I'm working with a registered investment advisory firm in New York City that is launching a publication soon that will be distributed very widely across the financial consumer community. And right now, we're working on an edition of that publication where we are partnering with an office within the UN, an asset management firm, a public relations firm, and the RIA firm itself that manages client assets across the spectrum and is encouraging their clients to be more sustainable in their portfolio strategies. So there's already a lot of momentum in financial services around what we're talking about right now. And even firms like BlackRock and people like Larry Fink and the CEOs of many big corporations are saying, yes, we need a more cooperative, more integrated, more collaborative approach to all of our work in financial services. And so I think there's huge opportunity over the next few years to accelerate the pace.
Yeah, and I'll just add about this specific moment in time, I guess my big question here is like whether technology is a public utility. As we see increasingly more and more people unable to necessarily work remotely, learn remotely, not even have any Wi-Fi where they're living. Certainly like just the gap in technological access is so wide across our city that we really need to think about how to provide this publicly and accessibly to everyone. So similarly for small and medium businesses who the vast majority will go out of business after experiencing a cyber attack, and they can't afford to hire, a chief security officer. And so how do we create like a cyber core to allow for nonprofits and small businesses to be cyber secure, even though they don't have the resources to do so? So that's kind of what I've been mulling over.
Liat, listening and watching today are many of us who have launched businesses or entrepreneurs right now, or thinking about launching a new business in response to seeing an opportunity because of what we're experiencing. From a cyber perspective, particularly within the cybersecurity space, what tips and reminders do we all need to keep in mind as we continue to, build safer environments for ourselves and for our families and for our companies?
Yeah. There are very, basic cyber hygiene practices that everyone should adhere to, like two-factor authentication. And there are a lot of resources that can help small businesses to just read about them. There's maybe 5 steps that every business has to do to keep the basic cyber hygiene. And constantly thinking about, most people think, well, it's not a big deal. Who would want to attack me? But actually, small and medium businesses are so vulnerable to cyber attacks because they don't think that way and they don't protect their assets. So I would say, don't think about the day before, think about the day after, when like your assets have been stolen, credit card numbers have been stolen, or any sort of like, special formula you have for your business is no longer yours. And then you'll start caring.
And where could we access those resources to learn more about for example, the 5 tips that you mentioned, or best practices for ensuring safer environments?
Let me give you a few.
Okay, yeah. Perfect. Paul, one question that I know is a burning question for many of us in the audience, and I'm looking through our questions from the audience. We have just a couple more minutes, so if you do have a question out there and you're still watching us, please make sure to submit it, and we'll try to get it in before the close of our show. Paul, talk to us a bit about performance of ESG funds in the last few months. And we know that it's a burgeoning industry, a burgeoning space in the financial services industry. And you and I were talking the other day just around the impact of it in 2019 versus what we're already seeing in 2020 pre-pandemic. And would be interested to know your thoughts in the sense of just, some of the data and the statistics around performance of those such funds.
Sure, Jan. Yeah. Well, first of all, Morningstar is a company that tracks all of this data for mutual fund portfolio strategies, and there are thousands of them, as many people who contribute to retirement plans know. And one of the things that they are seeing and began to see much more strongly in the fourth quarter of last year is the amount of money flowing into these types of portfolios that use environmental, social, and governance criteria in their portfolio selection process. So specifically, in the fourth quarter of 2019, $20 billion of new money was invested in these types of portfolios. And to just give you some comparison, the largest quarter prior to that in the United States had been about $8 billion in one quarter. In the first quarter of 2020, which includes the market sell-off at the opening of the coronavirus lockdown, an additional $20 billion in 3 months so far that's accounted for was invested in funds that use environmental, social, and governance criteria in their portfolio selection. And guess what? Those same funds, 40% of them performed in the top 10% of their category over the first 3 months of the year. So in addition to being focused on these types of investment criteria, what we're seeing, and people who've been in this industry for a long time already know this, is that ESG portfolio strategies typically hold value better during periods of high market volatility. That's one of the reasons that people are attracted to them both as advisors and investors, because guess what? When the market's really volatile, you have something else to talk about, like shareholder advocacy, and not just tracking how much your portfolio is up or down today or tomorrow. So I encourage people to start investigating whether there are opportunities for investing either on a regular basis or with inheritance money or whatever. They should be taking a look at these types of portfolios as part of what they're considering.
Paul, I remember attending the conference that you co-convene every year with Jeff Gitterman of Gitterman Wealth Management. And I remember one of the things that really struck me in Jeff's opening remarks was for financial advisors, often historically and in just traditional practice, would wait until their clients came to them to educate them on whether or not an ESG related fund should be a part of their portfolio. And Jeff really advocated for flipping that discourse, where this is a moment in time for financial advisors to step into their power to become better educators for their clients. And I'm wondering if this moment in time is often also triggering much more of that behavior, in the sense of financial advisors wanting to become more educated on what ESG really truly means in the lens of SRI investing.
Yes, that's exactly what's happening, Jan, because as any advisor who's been in that role for more than 10 years knows that periods of high market volatility, like we're going through now, are the most important times to talk to your investor clients about changes that they may want to make in their overall portfolio strategy. And literally this time around, I believe that we're in a once in a generation opportunity for transition of assets into portfolio strategies that align more clearly with all of the things that we've been talking about with regard to sustainability. So I encourage every advisor who's out there, man or woman, to look at the opportunities here. And literally for senior older advisors, this may be the last chance that you will have in your career to make these kinds of changes that will support the next generation of the next generation of investors who are controlling the wealth that you are managing for them. When you add that to the idea that the momentum in this part of the industry was already very strong when Jeff made those comments last December, the opportunity is golden right now for advisors, and it's going to last for probably a few years, but not much longer than that.
Paul, one other question from our audience pertains to robo-advisors and the benefits right now of working with a fintech-based investment platform, and how do we understand and assess good opportunities from not so great opportunities in the sense of having the machine do it for you?
Yeah, this is a really interesting question because as you know, robo-advisory and fintech advisory platforms are a fairly new phenomenon in the industry based on high tech, right, Leah? They're becoming much more a part of the infrastructure of this industry. I think many of them do a great job. They always offer services at very low cost. They're not as hands-on in their management and or advisory services as someone who works with a smaller number of clients, but maybe charges more for their services. One of the things that I ask robo-advisory companies is, how many client phone calls can you return over the course of a week when the market is very volatile and people are wanting to know what the heck is going on with my portfolios? That to me, that's an important question for them to answer. I don't know. I don't have any data on that so far through the pandemic, but my instinct is that part of what's happening in the robo platform part of the industry is that those platforms are opening up much more to sustainable investment protocols and strategies, and they are wanting to have those types of strategies listed on their platforms along with the financial advisor who is advising that client.
You know, it's interesting, and I think that there are also platforms that account for investments in real estate as well. And, you know, given our conversation on how valuations for residential and commercial properties could look very dramatically different in the next year, will fintech technologies be able to keep up to speed with what's happening in those spaces that are not just ebbing and flowing, but just transforming dramatically?
Liat, why don't you take that one?
Yeah. I don't know how robo-advisor algorithms work. So, yeah, so that is TBD.
Yeah, Jan, I'll say, what I will say is that there's been a huge transition technologically in the advisory industry over the last 20 years, really. And it's making a big difference in how responsive investment advisors and asset managers, frankly, can be to the public's interest in specific areas of investment like real estate or otherwise. Now, one of the things that's happening right now during the COVID-19 crisis is that a lot of advisory firms, for example, that I've been talking to about consulting opportunities for helping them do more digital programming versus face-to-face and handshaking at conferences, a lot more firms in the industry are saying, yes, I want to learn more about this. How can we get better at it? How can we be using it not just for meeting new potential investors, but also working with our existing clients? And Liat, to your point about how infrastructure sensitive all of these types of industries are, especially in big cities and where there are large populations to serve, I think it's more and more important, especially related to cybersecurity, because as we all know, the financial services industry is one of the most highly regulated industries in the country.
You know, it's interesting as we think about, what the ways in which technology will have to change in the sense of the past predicting the future, knowing that right now we are living the past, the present, and the future all within one moment in time. Liat, you worked in the past with a real estate tech company that was revolutionizing the way in which comps were performed. And I'm wondering in this moment in time too, given the dramatic nature by which just real estate valuations could change so dramatically, right? Like that's something that I think from a technology perspective has the potential to really be altered dramatically, right? In the sense of just how we think about the past as predicting the future, right? Because that's pretty much what a real estate comp is, right?
Yeah, I mean, I think a lot of like big data algorithms are based on an assumption that there's some sort of pattern that occurs that you can then base the future off of, something that will repeat itself in some way, shape, or form. So unless we have, we pull from the right data set of, how Beijing real estate data was affected in this month, and you have that data pool to pull from potentially, and obviously very different, but those are probably maybe more parallel at this point than maybe what the market was a year ago in New York City itself. So it's all about the quality of your data, right? In order to build an algorithm, you need to be very careful about what data you pull from.
Right. Let me add something to Liat's comment there, Jan, because she's bringing up a very important point for investors and financial advisors. Typically in the financial services industry, we have modeled portfolios based on backward-looking data. More and more today, especially as we're dealing with phenomena like coronavirus, climate risk, climate change, dramatic transition in migration patterns around the world, et cetera, we need to be more and more forward-looking in terms of our data analysis. And that requires us to build algorithms and cyber engines that can crunch enormous amounts of data to make projections into the future and not just look back to the past. So Liat's field is as you mentioned, Liat, the opportunities are going to be many. I think it's very important to encourage women and girls who are in school to focus on technology as a way to the future. I can tell you my 14-year-old granddaughter, I love it when she beats the heck out of me and everybody else in her computer games because it tells me that she's preparing for a career.
That's a great segue into my final question of the day. Liat, I would love for you to discuss your work as a filmmaker and your work in Sierra Leone, and particularly around the girls' school that your organization built.
Sure. So first, I'll get back to you on the question about what resources for small businesses. So Center for Internet Security, I think, is a good one. The Global Cyber Alliance, I think, is actually probably the best one because they have a small business toolkit specifically focused on cybersecurity hygiene practices that include videos and tutorials. So of all of the different resources, I think they are the first place I would start.
Excellent.
In terms of the Geneva project, So Geno Project is an NGO that I started with my partner, who is a survivor of the Sierra Leonean Civil War. We started the NGO about 12 years ago, initially building educational infrastructure like schools and libraries, but quickly realized that a lot of the focus of international NGOs in this space is all about scale and how quickly you can build more and more schools. And we were really disillusioned with the focus on quality education, particularly because in order to build innovation and growth in an economy, ultimately your most valuable resource is your talent pool. And so everyone's rushing to finance innovation incubators and accelerators in the developing world when people don't know how to read and write. And so we decided to open a high school that serves about 25 girls, 10th, 11th, and 12th grade, and keep it very, very small, but really focus on the rigor of the education and make sure that we're building in civic components as well, because what we see in Sierra Leone is those that make it end up leaving the country. There's brain drain and there's no real commitment to giving back. And so how do you really build that sense of mission and purpose and volunteerism into a curricula? And that's what we basically try to do with our work there. Of course, our school is closed, like all other schools at the moment. As it's, our girls are in families that make under $1 a day. And so they don't have phones. If they have phones, they don't have electricity to charge them. So we've given them all phones that have connection to the radio that provides educational curricula via, radio wave. We've given phones to our teachers who didn't necessarily have phones. So each of them can be responsible to follow up with certain girls. But the infrastructure, if we think it's difficult here to operate in a coronavirus environment, like Sierra Leone really shows you how easy we have it.
For what reasons were you originally drawn to Sierra Leone?
Yeah, I met my partner. We're good friends, and he's a survivor of the Sierra Leone Civil War. Obviously, saw a lot of things as a child that no one should see. I grew up in Israel, where I saw a lot of violence as well, and things I probably shouldn't have seen either. And I think, we had a lot of, obviously very, very different, but understanding what conflict does and how to rebuild societies post-conflict is kind of what we were both focused on for a long time. And so I don't really believe in community loyalty, to my specific community only. I think, wherever the need is greatest, and certainly in Sierra Leone, the status of women and girls is really pretty terrible. And so if we can help women and girls there, I think we're really working on an area that's a blind spot for not only definitely the private sector, but also for NGOs.
Mm-hmm. Final question of the day to both of you. In what ways do either of you believe that just the concept of ESG will change over time because of what we're experiencing right now?
I'll go first, Jan, if that's okay, Liat. I think it's going to go away. I think the moniker ESG will eventually fade gradually into the background because this will be the way that people invest down the road, and it's happening faster all the time. And there are more and more fundamental aspects of environmental, social, and governance investment analysis that ultimately will be right beside balance sheet metrics on an ongoing basis for all companies. I just was on a conversation yesterday with the head of research for the Climate Service, which is an organization that has come together over the last couple of years with some very sophisticated partners who have worked at all of the major asset management firms, et cetera. And what they're focusing on are the things that matter the most on a company and a sector basis, and they are going to be integral to the process for analyzing companies across many protocols. And they've recently been hired by the National Association of Certified Public Accountants to develop a protocol for them to use in their work with tax clients.
Yeah, I mean, I agree that I think the world is shifting in that direction. I think we also see it with CSR in terms of investing in programs. I think CSR used to be complete lip service. It now has shifted into being maybe a pillar of a company where the company takes the risk to try and do things in the sphere. And then if it works, then it moves it into its core business activities. And I think in the future, we'll see it more and more as part of the core business activities.
Liat, Paul, thank you so much for you being with us this morning. This has been quite a powerful conversation, and I love that we touched upon so many different very important and timely discussion points as it pertains to all things related to women and money. Thank you, everyone, for staying with us. I am Jan Mercer-Dom, the Vice President of U.S. Development with the Mayshad Group. Please make sure to check us out at joinmayshad.com for all of our upcoming programming. And we look forward to seeing you very soon. Thank you so much. Bye, everyone.
Thanks.